but it all depends. I mean, I've seen properties go 100,000 over on some condos in Southie. And that was on a 780 went for 880 in South Boston about 6 months ago, and the taxes didn't adjust.
If you're in the city, it depends on where you buy too. If you buy out in the suburbs and only 10 houses selling a year in that town, then they're more likely to come out and do it. In the city, they don't recalculate the taxes that often.
That in the city, you also get a residential tax exemption if you live in the property as well. I think it's roughly $1,500 or $2,500 or something like that.
It's cheap. I don't know the exact.
Yeah. So I mean, you get roughly, say on the low end, you get $1,500 off of that $4,000 or $4,600 number if you actually occupy the property as well. Just an encouragement by the city to move into the city and stay there. So back to that cash flow statement. If you look at that, we're going to look at our expenses next. Taxes on a monthly basis, roughly $400. Our insurance on a monthly basis is roughly $300. Water and sewer, $150. I think, like I said, I would probably bump that up another $50 depending on, like I said, washer and dryers, and depending on the type of heating system. Obviously, if you have steam heat, you're going to use more water. But like I say, $150. Electricity is. This is assuming that, like I said, you have tenants paying their own utilities. I would personally not want to buy a property where I was paying for heat and electricity for someone else. Like I said, I don't think that would be a good thing for you. Especially as a new investor, I would probably stay away from anything where the utilities are not separated, or if they're not separated, have a plan to separate them shortly after.
It's not their money, so
right.
Crank the heat up, let's leave the windows open.
Right. Regulate the heat by how wide the windows open. Yeah. So this assumes that $50 electricity cost assumes that your common areas. As a landlord, you cannot charge common area, which means basement, exterior lights, front porch lights, to any given tenant. If you live there, you live in Unit 1, you can charge those common area to your electrical panel or your electrical bill. If you move out of that property, you do need to add a fourth, what they call public or common panel, which need to be done on the property, and that's typically what you would have is a $50 electricity bill for common area lights. Like I said, you're lighting the basement and everything like that. So, maintenance, I threw $50 a month in there. Like I said, you can adjust it depending on the property that you buy, how much you want to do. You might have a property management charge in here too. As like I said, if you move outside the city, you move 40 miles away from your property, obviously you would want somebody to be there to shovel snow, rake leaves, collect rents possibly. So. Those expenses you might have to throw in if you, like I said, if you want something, but it's not going to throw the budget off too much. And the last thing we threw in is PMI. John could tell you, I don't know if this is, I assume it's pretty accurate. It might be off by $100 at most, but I'd assume on a 610 property, you're probably looking at a $400 monthly PMI payment.
It's going to be a little bit north of maybe like $125, north. But new factors, I mean, the FHA, I mean, 4 years ago, I think the monthly, I forget because it changed so often, it used to be 1.15, and now it's up to 1.35. So they saw an influx of people just trying to, put as little money down as possible. And said, hell, we're going to get some more money out of these people, and we're just going to jack it up. And now it's stuck with you for life alone. There's a lot of changes that go on in the mortgage industry, and there's stuff that comes up all the time, and stuff changes on a weekly basis, guidelines and stuff like that. So I won't get into that, but
yeah. So. If you look at the next line is your total expenses, that 4, 3, 150, 50, and that 400 ends up being $1,350 a month in terms of your total expenses. If you take the $5,100 that we're collecting in gross income, you subtract your $1,350, you end up with a net operating income of $3,750 a month. Your net operating income is obviously before your principal and interest payment. Once you take away your first mortgage or your debt service, which is your principal and interest payment that we calculated at 2810 a couple pages back, you end up with a monthly cash flow, after all is said and done, of $940 a month. This is not bad. $940 a month, let's just round it up to $1,000, it'd be $12,000 a year. It's almost 60% of what you put down as a down payment. It's a pretty good return on investment. Like I said, I don't know how many of you are in the stock market right now, but if you can get over 60% return on investment, I mean, like I said, you're not going to find that in too many other places. This is actually not that impressive, to be honest with you. This is, like I said, okay. $940 a month is okay, but there's been a couple of people out there that I've worked with that have this same scenario that bought at the right time, and I mean, the deals are still out there that are cash flowing $2,000 a month. And like I said, this is, I'm pretty sure, a scenario that is not going to stay the same.